Good evening, everyone. Time for another silver update. We are back at the 8-hour chart of silver, and you can see we rallied fairly strongly from this support line in here and turned back around, and we've corrected about 50% of the rally. So it's going to be interesting. I don't put a lot of stock in Fibonacci's, but I think the Fibonacci's are 50% and then 67 or something like that. So we'll see where we go or if we correct. We have a really amazing print on the daily. You can see we've got negative 2.72 on the daily. As I pointed out before, we just exceeded the lows of the May SmackDown. Now we have dramatically surpassed those lows. So we're approaching an oversold condition that has never been seen before on the daily. Now on the weekly, we haven't caught up yet, but you can see we're heading straight down to the zero line. So we want to see how long it takes the weekly to bounce. And of course, the monthly, we are just approaching a crossover sell-off on the monthly. So obviously your bears are going to say that we're probably going to correct down to 20, and then they would expect a penetration down to maybe 15, and ultimately they would be looking for a top of, say, 750 or 8. I just couldn't imagine that happening. It would be wonderful if that would happen. Actually, though, I think that if we get anything below this 26, you probably won't see any silver available on any of the sites. I didn't take the time today to document the disappearing silver, but it is disappearing rapidly. My recommendation for the African elephants that I liked a lot, I'm starting to think about maybe not sharing my recommendations, because I was hoping to maybe, if we got a lower price, to get more of them. One thing that you want to do is, if you buy from APMEX on a bank wire, I paid $10 shipping on mine, and there's really no other costs. So that's such a low transaction cost as far as just getting in and out of things. I remember seeing that. Let's actually pull them up here. I remember seeing that price that came up on the elephants on APMEX actually hit, I think at one point it hit $2.50, excuse me, $2.50 above what I paid that APMEX is willing to buy them back at. And I'm not really sure why or how APMEX assigns their relative buyback prices. There's some coins, like I said, the Tigers that I had that went for 119 and they're gone, but APMEX doesn't have a buyback price on them. So I'm not really sure why APMEX lists that. You can see the buyback price now on these is $30.97. They don't have any left. I saw this hit as high as $35, I think. So I guess I could have called them up and said don't ship and just send me a check. But of course I want the silver. I don't really care about the dollars, and I'm going to get into that in a bit because that's going to be the main topic. But I did pull up these, and these did go, I think someone took out 500 of them. They just disappeared. People reported they were just gone, and I haven't been able to find these anywhere else. If you can find these somewhere else, I'd really appreciate it, because once I get mine in, which they did ship out FedEx today, so I'm really excited about getting these coins. But if you do find them sold somewhere else, I sure would like to know about it. I haven't been able to find them. But I did search for them today on eBay, and I know a lot of people really diss eBay. I'm not really sure why, because I'm not looking at eBay as a seller. I'm just looking at eBay as who the buyers are and what they're paying. And you can see our coin here went for $54 plus 2 shipping and $58, and that was on the 27th. So that was yesterday. That was after the price had touched that low. So a very good deal on this coin to be able to pick it up for 32, 33 bucks. I think everybody that did got a great deal. So I wanted to get to the main topic, and that is saving silver. And as we go back down to the lows here, I know a lot of people have voiced concerns about my obsession, they would say, with numismatics. I just like the numismatics because I've done a video on it in the past, the reasons why I like them. But the main reason I like them is they give you a confidence as soon as you buy them and they're gone, that there are people willing to pay a premium way higher than you paid. And the main importance is that they give you the confidence to hold. And if you did happen to have to sell, which hopefully you never will at these low prices, but if you did, you could probably actually turn and make a quick profit on them because they're so rare, a lot of these numismatics. But the main topic I wanted to talk about is about saving silver. And a lot of people have complained with the recent drop that we've had here about losing money on silver and taking a loss and getting washed out. And you can go to the boards, whether it's the Kitco Silver Forum or their Silver Stackers Forum. There's a lot of silver forums out there. You can go and look at them. There's a lot of people complaining. I'm not really sure why they would be complaining, because this is an incredible gift that I never thought I'd see. I didn't think silver would ever go below 30 again, ever, in dollars. But I was wrong, and gladly wrong. I'm always glad to get a good low price to stack some more physical silver, because ultimately what you're doing is you're saving silver. I'm going to try to flesh that point out a little bit here. I'm going to start out with an article in Wikipedia about investment management, and this just is going to kind of give you an overview of what we're talking about here. This is the size of the global fund management industry. And the reason why I'm bringing this up is because a comment on one of my channels, or one of my videos, was addressed to the issue of what's going to happen when the hedge funds and the pension funds and some of these funds start getting into silver. And my response was that they aren't going to be getting into silver, at least real silver, because that's the equivalent of a camel passing through the eye of a needle. It just simply can't happen. And I'm going to demonstrate that to you tonight. Now, let's read this. This is the size of the global fund management industry. Conventional assets under management of the global fund management industry increased by 14% in 2009. Now, some of these figures I'm going to give you are old figures, but that's fine. They're higher today, so the argument still holds. They increased 14% in 2009 to $71 trillion. Pension assets accounted for $28 trillion, with $22 trillion in mutual funds, $20 trillion in insurance funds, together with alternative investments, sovereign wealth funds, hedge funds, private equity funds, exchange-traded funds, and funds of wealthy individuals. Assets of the global fund management industry totaled over $105 trillion. So that's the amount of money that's out there, according to this article. Now, I've got another article I'm going to show you that gives you an idea as well. So here we're looking at 105 trillion. That's the amount of dollars sloshing around the world looking for a home. Now, the next article is even better because it gives us a pyramid of what's out there as far as monies invested. This is the Great Credit Contraction Pyramid. It puts the derivatives at the top, and they're not going to let me click on the picture, but at the very top you have $1,600 trillion in derivatives. That includes the shadow derivatives, reported derivatives, and unfunded government liabilities. They're treating that as if it's money that's out there. It's really not money that's out there. It's a debt that's owed that can't be paid. So it's not, I won't really include that, but the next level on the pyramid is miscellaneous assets. That's the value of private businesses, commercial real estate, residential real estate, non-monetary commodities. Now that's interesting there because the non-monetary commodities are estimated to be 4 trillion. If you look at the bottom, this you have power money, and that's just gold and silver, and that's 2 to 4 trillion. So if you add up all the commodities in the world, you got about 4 trillion. If you add all the gold and silver in the world, you got about 4 trillion. So these numbers are similar to the numbers that we saw. You can see securitized debt, stocks, 100 trillion. So we're looking in the area of maybe 100 to 200 trillion. So that's roughly the amount of money. We want to think about the amount of money that can flow towards silver. So now let's look at some statistics from the Silver Institute. Now they've got numbers from 2010, and they show you, of course, here's world silver demand, which obviously is growing. It will do nothing but grow. Recession, no recession. Depression, it doesn't matter. It will do nothing but grow. Here's your countries and how much they produce. And these are your stocks. And all this is very suspicious. The most suspicious thing of all is this total supply and total demand. If you'll note, as Jason Hommel has pointed out, these numbers match identically. 1056.8, 1056.8, 922.2, 922. They're actually exactly the same all the way across. Like a balance sheet. Well, we know that silver is not a balance sheet, so why is the demand and supply exactly matching with silver? It's not a balance sheet. But anyway, the numbers I really wanted to seize upon here are these. This is your investment demand for silver. The rest of this stuff is either used up or recycled. You can see you've got silver. We'll take these three categories: photography, jewelry, and silverware. This is the demand. This is how many ounces in millions. Remember, this is in millions of ounces. These are how many ounces that are used up in these three things. Photography, which you can see has dropped off a cliff. And that was one of the reasons why they projected that silver's going to crash. Well, photography is going to decrease because of electronics. Well, the very electronic devices that are replacing the photographic devices are actually using more silver than their counterparts. And you can see that in the industrial application growth. So that's a bogus argument. Always has been a bogus argument. But nevertheless, that's a side point. So if we look at these three together, photography, jewelry, and silverware, you've got 50 million, 160 million gives about 210. Let's say 280 million ounces here of demand in those three. Now you've got old silver scrap. That's probably those three coming back in. They're roughly equivalent. There's not quite as much coming back in as there is going out, so we'll just call those a neutral. And then you've got mine production up here. You can see it's grown and it's jumped in these 2 years, but it's not jumped significantly. And then you've got the key number here I want to focus on, and that's coins and metals. That's really investor demand. Now you can see this last year here of 2010 jumped to 101 million. That's a 25% increase, and it's been increasing steadily. You can see this jump here from 39 to 65. So big jumps. But anyway, this number here, let's just say this is the number that we're looking at here. This is 100 million ounces of silver. This is the amount of silver that the silver savers, I'll call them, the people that are saving their money in silver, are accumulating. So 100 million ounces of silver at today's prices, and we're just going to use 30. It's at 29.53, so we'll say 30. At $30, 100 million ounces of silver comes to 3 billion. So let me check my math and make sure I'm right, because that's almost too much to believe. It's 100 million times 30, and that is $3 billion. That's $3 billion out of $105 trillion. So that's 105,000 to 3. That's your ratio. So this is the point. As the comment was said, wait until you see the funds begin to enter into the silver market where the price is going to go. I'm telling you, with the price as it is right now, until this price, and this is no exaggeration in my mind, until this price moves 100-fold from where it is, until the price of silver is roughly, say, a couple $1,000s an ounce, there is no way for any of these hedge funds or these derivative groups, investors, pension funds, any of these, they can't get into the door. It's too small. It's like a camel passing through the eye of a needle. So what we're interested in is saving silver. That's what you're doing when you stack your silver. You're saving your money in an alternative form of savings that is worth 10 to 100 to 1,000-fold of the type of savings that people are doing right now. And you're by yourself if you're stacking silver, because there isn't room for anybody else to be with you, because only the little guys are allowed to stack silver, because there just isn't enough silver for the big guys to stack. And if we look at something that is a paper silver investment that the big guys can stack, such as our SLV, which is a JP Morgan, in my opinion, fraud to divert investment dollars away from silver, you can see the net assets are $12.95 billion. So even if we take them at their word that they have all that silver stored somewhere in a warehouse and all those bars are inventoried with numbers and everything like that, again, $12.95 billion in the face of the hundreds of trillions that we're looking at is peanuts. And I don't think this is real. I don't even think they have any silver. I think it's just an attempt to divert money away from physical silver. And we've shown you the numbers. The numbers are just astronomical. The amount the amount of dollars are in the hundreds of trillions. The amount of silver is in the hundreds of millions of ounces, which each year amounts to about $3 billion. So you need to keep stacking silver because you're by yourself. The hedge funds aren't with you because they can't be with you. Only the little guys allowed to play this game. When we get up above $1,000 an ounce, then maybe the door's big enough for the hedge funds to get in. But right now, it's just the little guy stacking and saving silver. And we'll talk to you next time.